Hey guys, welcome back to episode 6 of US Stock Market Technical Analysis. If you are new to this channel, in this playlist I share with you my technical insights of the US stock market. I take a look at the 3 indexes, namely the S&P 500, the Dow Jones and the Nasdaq. So if you are new to this channel and are interested in this kind of technical analysis video of the US stock market, then subscribe to this channel so that you don't miss out on future videos such as this. Alright, let's begin this video by taking a look at the S&P 500 first. So we'll begin by taking a look at the weekly time frame and then work our way down from the weekly time frame. So in the previous week, we opened at this level over here. So it's around 325 and we managed to close at this level of around 328. So we are up for the week and we have break 3 consecutive weeks of losses. And if you take a look here, let me put on the technicals. So you can see that we managed to find support at this important level of 326. So if we zoom in a bit, prices open at this level of 326 before prices were pushed down. But as the week progresses, the buyers step in and manage to wrest control and push prices all the way back up and close at this level of 328. So the fact that prices managed to find support at this level of 326 and managed to close above it at 328 give the bulls in the market some optimism. Okay, let's now go to the daily time frame to have a greater insight of what is going on with the S&P 500. On the daily time frame, you can see that we are on a downtrend. So this is indicated by lower high. So this is the high, and this is the lower high, and then a lower high. And then the lower high is also accompanied by a lower lows. So lower lows here and lower lows here. This shows that prices are making lower highs and lower lows, and this indicates to us that prices are on a downtrend. This is the daily time frame. So this is the Monday candlestick. You can see on the Monday candlestick we gap down. So there was a gap between this candlestick here, which is the previous Friday's close, and then this was the open for Monday. So there was a gap over here. So the gap down on Monday was a bearish signal. However, there was still some bullish points to take away. On Monday, prices opened at a price level of around 325 and prices were pushed all the way down to this level of 321. As the day progresses, the bulls managed to step in and push prices up to close at a higher level of around 326, giving us a nice bullish candlestick over here. But perhaps the most significant bullish point was that price managed to close above this important level of 326. So this level of 326 was the one that I mentioned earlier on in the video at over here. So it was formed at this level over here. Prices managed to close above this level of 326 and hold its support at that level indicates quite a bullish signal for us. So on Monday, there was a convergence of bullish signals. So the first bullish signal was the hammer candlestick over here. And then second one was the hammer candlestick forming at an important support level. And this indicates to us there might be a possible bullish reversal coming up. And we see on Tuesday, prices managed to gap up. However, the joy of the bulls in the market were short-lived because on Wednesday, a long bearish candlestick was formed and managed to push prices all the way back down and close below the important levels of support. And furthermore, this long bearish candlestick indicates that there was strong bearish momentum. Once we broke below the level of 326, the next level of support was this level over here at around 319. On Thursday, prices were finding support at this level of 319. So prices were pushed down, but when it reached close to the level of 319, prices were pushed back all the way up and it closed at this level just below the support zone of 323. And on Friday, prices managed to form a long bullish candlestick, which tells us that there was some bullish momentum behind prices. And we also managed to close above the important level of support at 326. Heading into next week, there are a couple of options that prices can play out. The first one is prices still managing to find support at this level of 326. And there is upward momentum of prices. So prices will play out here and then find support and then continue to move forward. Or the second scenario is prices ranging between this level of 326 and this level of 334. So price might continue to range within this area for a while. The third scenario will be price not managing to find support at this level of 326 and break below this support. So if prices do break below this support, the next support that I'm taking a look at is this level of 319. So prices might find some support here before continuing all the way down. And then the next level of support is this level of around 314. And this level of support at 314 is a very important level that I'm taking a look at. So if prices break below this level of 314, then this might indicate that there might be more further potential downside for the S&P 500. And the reason why this price level of 314 is an important level that I'm taking a look at is because this price level corresponds to an important Fibonacci level. So we plot the Fibonacci starting from this point over here at the base of the move and then all the way up to the peak of the move. So this will be our Fibonacci retracement. For the Fibonacci retracement, we have the important levels at the 38.2% level, the 50% level, 61.8% level, and the 78.6% level. And over at the 61.8% level, prices are finding support at this level over here. So you can see that prices reach this level, it finds support and close back up. And for this bearish candlestick over here, it also managed to find support at this 61.8% level. And then here on Friday's candlestick, prices also test this 61.8% level and managed to find support and push all the way back up. So this 61.8% Fibonacci level is an important level that I'm taking a look at. And if prices do break below this 61.8% level, then the next level that I'm taking a look out for is the 78.6% level. And that is why I'm paying special attention to this support zone over here. Because this zone is not only an important zone of support, but it also corresponds to an important Fibonacci level, specifically the 78.6% level. So if prices do break below this important support zone and the 78.6% Fibonacci level, then this can indicate to us that there might be further potential downside for prices. If you have learned something from this video so far, smash that like button because it will really help the channel grow and allow me to produce more content such as this. That's my technical analysis for the S&P 500. The next one that we'll look at is the Dow Jones. So let's go on to the Dow Jones, and then we'll go on to the weekly time frame, and similarly we'll work our way down from there. So let me clear up the technicals. The Dow Jones have actually recorded 4 consecutive weeks of losses. While that is certainly not optimistic for the bulls in the market, the formation of a hammer candlestick last week indicate that there might be potential bullish reversal in the weeks ahead. And if we bring on the technicals, the formation of the hammer candlestick is at this area of support. This gives us an even higher probability that there might be a bullish reversal in the coming week. But with that said, we want to see confirmation of this bullish reversal by seeing prices closing above this week's closing price. We want to see prices closing at a level higher than 271. That's the weekly time frame for the Dow Jones. Now let's go on to the daily time frame. Okay, so this is the daily time frame. Similar for the S&P 500, the Dow Jones is in a downtrend. So you can see that prices are making lower highs. So this is the first high, this is the second high. So there's a lower high, and we're also making lower lows. So this is the first low, this is the second low. So we are making lower highs and lower lows. We are in a short-term downtrend. While we are still on a long-term uptrend, these lower highs and lower lows in the past couple of weeks indicate to us that we are on a short-term downtrend. So the long-term trend is still up, but in the shorter term, we are in a downtrend. For the Dow Jones, on Monday, we also gapped down. So you can see that there was a gap between the previous Friday's close and Monday's opening price. So there was a gap over here. And there was huge selling pressure, which pushed prices all the way down to a level of around 267 before prices managed to find some support at this level over here and push prices all the way back up and close at around 271. So prices on Monday managed to close above this support zone over here as indicated by the purple box. And on Tuesday also prices managed to find support at this support zone over here. But on Wednesday, there was huge selling pressure as indicated by the long bearish candlestick. So prices were pushed all the way down to close below the support zone and at a level of around 267. But on the subsequent days on Thursday and Friday, prices managed to find support at this price level of 266. And on Friday, there was quite a strong bullish momentum which pushed prices from this level of around 267 to close above the support zone and at a price level of around 271. So there was certainly some bullish momentum towards the end of last week. Furthermore, if you take a look at the last 3 candlesticks for the previous week, from this candlestick here, Wednesday, Thursday and Friday, prices form a variation of the morning star pattern over here. After a decline, as you can see from here to here, when a morning star pattern forms, this indicates to us that there might be a potential bullish reversal coming up. And on top of the morning star pattern forming after an extended decline of prices, the morning star pattern also formed at this important level of support at 266. So the combination of these two things gives us a higher probability that there might be a potential bullish reversal in the coming week. So in mind of the potential bullish reversal that the morning star pattern indicates to us, prices might start on an upward trajectory. Prices might rise up, find some support here before continuing up. But in the event that this is a false signal, then prices might break below this support level of around 266 and continue downward before finding support here. And this will be the next support that I'm taking a look out for. So this price range of around 263 to around 260 is the next support zone that I'm looking out for. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So we'll start with the weekly time frame. So the Nasdaq faced 3 consecutive weeks of losses before last week, and last week we managed to record some gains closing at a price of around 271. The Nasdaq also managed to form a piercing pattern on the weekly time frame over here. The piercing pattern is a potential bullish signal for us as investors and traders in the stock market. So the formation of this pattern on the weekly time frame indicate to us that there might be a potential move to the upside in the coming weeks. As with any other indicators or patterns, this only gives us a higher probability of success. It by no means gives us a 100% accuracy in predicting where prices are going to move moving forward. So that's for the weekly time frame. Now let's take a look at the daily time frame. And we'll bring on the technicals. On the daily time frame, we see that prices are trading within this range over here. So this was Monday, Tuesday, Wednesday, Thursday, and Friday. So for the whole of last week, prices were trading between a range of around 260 and 272. This zone over here, as indicated by the green box, is an important resistance level for prices, and this green box below is an important level of support. So moving forward, we want to take a look out for these two zones of interest. For example, if prices break below this zone of support, then this indicates that there might be further potential downside. On the other hand, if prices break above this green zone over here, then it signals to us that there might be further upside for prices. Let's move on to the 4-hourly time frame to have a greater picture of what's going on for prices. Prices are potentially forming a double bottom. So this is the first bottom, and then this is the second bottom. I'm personally looking out for prices to break above this zone of resistance and finding support here before continuing up. And if prices do manage to break above this zone of resistance and find support here, then this confirms to me the double bottom pattern. But if prices break above this resistance and do not manage to find support at this level over here and instead continue to fall back down, then this does not validate the double bottom pattern. And we have a perfect example of a failed double bottom pattern on the left side of our charts. If you take a look here, this is the first bottom, and then this is the second bottom. Although prices managed to find support at this zone over here, and even breaking above this resistance zone here, prices did not manage to find support here and instead it broke back down. So the double bottom pattern for that example failed to materialize. And that is why for this part of the chart over here, for it to be a confirmed double bottom pattern, I want to see prices breaking above this level of resistance and managing to find support here, and then this will confirm the double bottom pattern for me. So if prices do not manage to find support at this zone over here, the next support zone will be this purple box over here. And if prices manage to break below this purple box again, then the next level will be this level over here. That is my technical analysis for the Nasdaq. This wraps up episode 7 of US stock market technical analysis.